Hello everyone, my name is Dušan Dinesić. I will be your professor during these two 25-minute sessions on finance in China. Today I want to talk about a topic that is very dear to me, and that is the topic of digital currencies. Specifically, I will give some examples of how Alibaba has arranged them, and I will give some examples of how Chinese Central Bank has arranged them, and I'll bring you through from the theory and history to practice and future. So that will be our little journey today. First, you should know a little bit about me. I have 4 years of experience in teaching economics and finance, specifically with the China focus. So I usually teach foreigners how to deal in the China environment. I've previously worked in private and public sector, especially in banking and in finance. I've also been an educational kind of economical advisor to a very interesting crypto currency, kind of a digital token, let's say, that helps entrepreneurs find mentors and educate entrepreneurs into how to start businesses. So, and this was launched in Singapore, so it's kind of a China, Asia-based token. And I'm currently doing research in blockchain in education, in how to apply the blockchain technologies in the educational sector. So these are kind of my credentials, what makes me competent to stand in front of you today. And the agenda of today will be a brief introduction of the theory of digital currencies, then the history, specifically in China. Then we will talk about the possible future, where these currencies are heading. And then after the break, we dive into specifics. We'll talk about the digital space race, as it's been dubbed. We'll talk about DCEP, and we'll conclude a little bit about how these currencies are going. So, let's begin. What is currency? We cannot talk about digital currency without knowing what currency is. But currency, some will say, is just money. But that brings a different question. What is money? Here we go a little bit into economics theory, so bear with me if you learned this already. But money is basically something which has these 4 essential functions. So it has to be a medium of exchange. If it's not a medium of exchange, it's not money. And then store of value, measure of value, or unit of account, and standard for deferred payments are 3 more functions which good money should do. Not necessarily all money is equally good at these 4 functions. What are these functions really? So the means of exchange, or the medium of exchange, means that I can turn an hour of my work into money, and I can turn that money into a product, a good or a service that I need. So for example, if I need bread, I can turn my labor into bread, without having to barter directly with the baker to give me bread in exchange for teaching. That is the basic function of money. However, beyond that, money has a few more purposes. One is it's a store of value. I cannot save my classes for later. I mean, I can digitally save them, but I cannot save my effort put into them so that it accumulates in the future or something like that. But I can save money. I also cannot save eggs if I'm a farmer, and I cannot save ships because they rust. So I can take a product that I make, sell it, and then keep the money until a later date, and the value should remain, well, if not same, then at least similar. Maybe higher, maybe lower, but approximately similar. Third function is measure of value, or unit of account. It just means that it helps us compare 2 different products in their value. If I asked you, for example, how many hours of cleaning the floors equals to a car? This is kind of abstract, right? So you cannot directly compare labor of a person into a physical product. But if I told you that a cleaner makes $10 per hour and that a car costs $10,000, you can say, well, 1,000 hours is 1 car. And that is kind of a magic of money, right? Through the marketplace, it adjusts the prices, and then through those prices we can compare relative values of 2 products using money. The fourth and the final one is it's a standard for deferred payments. What that means is I can promise you I'll pay you $100 next year, and you know approximately what that is. If I tell you I'll pay you 100 eggs, what eggs? Big eggs, small eggs, chicken, quail, duck, you know, will they be good? Grade A, grade C? So you see, that is not a standard. Money is a standard for deferring payments. If I promise you a payment in the future, I will express it in money, and money will express that value well. Now, those are the functions of money. Money also has some attributes, and there are quite a few of them, 7 to be precise. It's generally acceptable, which is the most important function of money. Without it, again, it's not really money. And then portable, it can be carried, divisible, it can be divided into smaller parts, recognizable, you can tell money from not money, you can tell this isn't money, and you can tell that another USD bill, for example, is. It's homogeneous, all of them look the same, and it's limited in supply. It's not like leaves, which are almost unlimited. So these are different aspects that the money should have, and cash has most of them, but not all of them. Actually, divisibility is kind of tricky. Cash cannot really easily be divided. You have to have change, which people don't always have. And portability is relative. Some money is portable, lots of money is not. And if you're in a country which has really high inflation rates, that money can really not even be portable anymore. So cash is not really good money. It lacks some of the perfect money ideas. What would be then a really good money? Well, it would be some currency that is accepted in a country. That's what makes it a currency, right? If you go to China, they will expect you to pay in renminbi, in Chinese yuan. You cannot pay in any other currency because those other currencies are not generally acceptable in that country. In that sense, gold is not a currency. It's a commodity. It's a good you can trade. It can be equal to some amount of currency, but it's not a currency on its own insofar as it's not generally acceptable. If you go into a shop and try to pay with gold, they will refuse, unless you give them enough, yeah? But good currency is just one that is accepted, right? The other features of money are optional, but if it's not accepted, it's not money. And that's one of the problems that, for example, Bitcoin has, is that it's not still generally acceptable. It's kind of troublesome in that way. So digital currency is actually superior to cash in almost every sense because it has sometimes a more fixed value than cash of some countries, and it's perfectly portable, it's perfectly divisible. You can divide a Bitcoin into 0.00001, no problem. You can also carry infinite amounts of digital currency with you on your phone and it weighs nothing, right? So in some sense, digital currency is strictly superior to cash, almost fully. Keep that in mind. The main barrier really is infrastructure. There is no fully digital currency that is fully accepted. It's always been kind of, you can have some money in the bank, but you can easily change it for cash. And cash is considered the actual currency. But that is now starting to change. As internet gets faster, people have more ubiquitous access to digital devices. Things are becoming better insofar as infrastructure goes for these digital currencies. So, let's move on to history of digital currencies. How did they start? It started with 1983 with David Chaum, who made this paper called Blind Signatures for Untraceable Payments. He was part of a movement that was called cypherpunk, which is kind of a funny name, but for a pretty serious group of people who really took privacy seriously. And they said, you know, nothing is more important than being anonymous and safe. And so it started in 1983. It moved on. In 1989, DigiCash launched, which was the first kind of digital currency that promised it can be exchanged for dollars and you can use it to pay your friends. Government took notice. This was in the United States. In 1997, Hashcash, Web Money, B-Money, were all claiming to be anonymous, substitute for cash, that's like distributed electronic. They weren't what we would call blockchain technologies as we know them today, because the technology was not quite in yet. But they were definitely dangerous enough that the government, the US government, decided to kind of ban them and kind of put a stop to all these things in the States at least. In 2005, interestingly, QQ coins, launched by Tencent, the Chinese company, kind of started, and they were just a way for you to pay for games or services by Tencent, but they were digital, and people could transfer them between each other really easily, and so people started doing that. They started treating Tencent QQ coins as real money. And the Chinese government, reasonably so, started to get worried because people were starting to exchange cash into QQ coins and keep it in QQ coins and use it to pay for goods and services. But this was not as well controlled and regulated as regular money, and central bank should always kind of be worried when that kind of thing happens. So they kind of curtailed a little bit how QQ coins work. In 2006, there was something called the Liberty Reserve, another startup that said they are the new digital currency. Again, US government had to intervene and stop them. And then in 2008, we move into the modern history of digital currencies, right? The Bitcoin white paper was made by allegedly a person called Satoshi Nakamoto, which is probably a pen name of someone. And that is how the modern digital currency started. He said, it's possible to do some currency like this. In 2009, he actually launched it. And in 2013, kind of Bitcoin 2.0 started, which was Ethereum by Vitalik Buterin, who moved a step further and said it's not just going to be a currency, it's also going to allow for some smart contracts and things like that. By today, people are already talking, Bitcoin 4.0, 5.0, with new functions added in, with it being more energy efficient and not so toxic for the environment through all the mining. But this is kind of where we are. When we talk about history, I will stop with Ethereum because everything after that is almost the present. Now, in China, the history started with QQ coins, which I already mentioned, and people kind of were quite quick to adapt Bitcoin in China because they saw, oh, it's like QQ coins. They already had some experience with it, which was not the case in the West. And so actually, Bitcoin moved much faster in China than in other countries. Now, the government, of course, saw that and said, whoa, well, that's not okay. Chinese people used it for investments because in China, the proclivity to save is much higher. And so a lot of people saw Bitcoin not as a way to be private on the internet or avoid supervision, as much as they saw it as a good investment opportunity. And so Bitcoin prices kind of rose until in 2016, Chinese government said, okay, we're regulating, the crypto exchanges are illegal, can't work. And that kind of crashed the Bitcoin market. But at the same year, government said, actually, for a few years now, we've been working on a government-made digital currency. And since then, that kind of unknown branch of China, People's Bank of China, China Central Bank, has been working, submitting patents and polishing and fine-tuning this digital yuan, this online version of a currency. And in 2017, Xiong'an New District started the smart city, which had its own microeconomy with its own digital currency, which was kind of a beta test of the currency to come. China does that a lot, doing these little tests in a small area and then replicating it larger, scaling it up. And in 2018, central bank digital currency, CBDC, or digital currency electronic payment, DCEP as it's called, has been made public. They said, we are going to do this. In 2019, they started testing it out. They allowed some banks and some companies to beta test it. Interestingly, they haven't allowed Alibaba to do it, even though Alipay is one of the biggest digital currency providers. We'll talk about that later. But they were not allowed to be one of the beta testers. So that's kind of curious. But they had their reasons. And so since then, it's been in the trials, and they say that basically we are one regulation away. It's already ready, set, it can go, but they're still fine-tuning some tweaks. And that brings us to today. So how did this digital market start in China? Well, Alipay and WeChat Pay are actually the two largest players on this market. It's very interesting. If you can, go and listen to McKinsey podcast, which had a really good discussion before Alipay and WeChat Pay really kicked off, saying, you know what, banks in China are kind of slow. They're not pushing for debit cards, they're not pushing for credit cards, and China has these innovative tech companies that are really racing ahead. And they said, we wouldn't be surprised if some tech company came and took the banking from the banks. And that's exactly what happened later next year. First, WeChat and Alipay came in, then a lot of smaller players. But today, these two really dominate the market. You can see how from year to year, this market has only been getting bigger and bigger, almost doubling in size. And WeChat Pay is about 38%, Alipay is about 54% of the payment market. You can see Chinese people actually, most of them pay digitally. More than 50% of payments have been done digitally, which I think is really unique, especially for such a big country to have such a fast switch to digital payments. And from that to a digital currency, it's not even a leap at all. It's just a different tap on your phone, right? You can see that less than a quarter of payments are done in cash. You know, that's really a staggeringly low number. You can see in 2018 the market penetration. A lot of people use WeChat Pay because WeChat is also the social media app for Chinese, and so they simply have it and pay with it sometimes. And Alipay is not a social media app, it's just for payments, but it's also for investment and rent and things like that, paying utilities. So the market is kind of split between these two large players. They're different from banks, and that's the reason why they took the market over. Not only did they do what banks could do, they did it better and cheaper. They have much easier payments, QR code, versus having a credit card, swiping, typing in your PIN. No need. Scan a code, leave. It's really a matter of seconds. Fees are lower. Transfer fees between people are zero. Transfer to your account is like 0.1%. Really low fees. And it's ubiquitous. Everyone uses it. You wouldn't believe. I climbed a mountain once, and on the top of the mountain there was a little shack, literally like 4 square meters. There was an old lady sitting there working, selling drinks and chips, and she had a QR code. And this was 5 years ago. And so even back then, you know, and today if you see some people like asking for money for charity, they go with QR codes. They don't even expect you to have cash, right? It's really a situation like that in China. It's really far ahead of many other countries. So what is the possible future? Digital payments really depend on regulations. If US government keeps kind of blocking them and stopping them, they'll never take off in the US. Government has the final say. Even though the markets are obviously open to it, government has the final say when it comes to these currencies. So we need to kind of keep an eye out for these regulations and see what they say to know what will happen. There are also these stable coins. They're kind of a cryptocurrency connected to an actual currency in the real world, or a coin that is based in real assets, based with hotels or some land or something like that. But they're still kind of in their early phases, most of them. There are also crypto debit cards, which are debit cards with just the advantage of being on a distributed ledger, and so being more secure than a regular debit card. That's also an alternative way for this digital payment to work in the future. And of course, the government-backed digital currency, the most interesting one, which we will talk about in the future. So we have spoken about the theory behind currencies and digital currencies. We've talked about the history of the digital currencies in the world and in China, and we've talked about their possible future. But let's kind of take a case study of a specific one. So in the second half, we will talk about the digital space race. We will talk about DCEP, the People's Bank of China-backed currency, and we will draw some conclusions about how it might look like in China, and from this extrapolate how it might look like in the world, since China is currently at the leading edge of these digital currencies. So let's start to talk about the digital space race. This is, I mean, you have the little funny graphic here. It's kind of like the space race was during the Cold War. This is the digital space race. All these countries are racing to get to being the digital currency that the world trades in. And currently China is far ahead of everyone else. But about 80% of commercial banks, so not government banks, but commercial banks internationally have said they are currently engaged in somehow working with some digital currencies, usually as a way of interbank transfers or a way to kind of settle accounts much cheaper than in the traditional ways. And you can see most of the G20 countries are keen to start some kind of digital currency. So it's obvious that the sentiment, the mood in the world is that this is going to happen and you can't stop it. So you better adapt, right? You can see some developing countries like Brazil, Cambodia, Saudi Arabia, Turkey and such. They all are having some solid steps where either their government has definitely said they want to do it, or they already started some testing on some cryptocurrencies that they might be doing, or at least digital currencies, if not crypto. So, you know, there's that movement going in that direction. And definitely China among them is the furthest ahead. Besides governments, of course, private companies are also looking into that. Not only the companies which are primarily about cryptocurrencies, like blockchain, like Bitcoin or Ethereum, but also companies like Facebook. Actually, Facebook Libra is quite caused a stir on the international markets because they said, you know, we will launch our currency that people can use to pay for things on our platform, which would be okay if Facebook was not also the largest social network that has over 2-point-something billion users in almost every country in the world who are now then able to do transfers with each other. That would make Facebook kind of the largest provider of these currencies in the world, bigger than any individual country. That, of course, you know, has to go through regulations of each of these countries. US has had a Senate hearing with Mark Zuckerberg to kind of see what this would be like, what does it mean. Again, as I said, it's not without reason. Whenever someone wants to take the job of the central banks get very defensive because they have to control the monetary policy of a country. Otherwise, they cannot stop inflations or control exchange rates if people are using alternate currencies, right? So having a centralized currency is important for government, and they don't want to let that go to private hands like Facebook or Google or something like that. So that's the current state in this digital space race. So let's take a look at the top competitor, China.